Hello traders and welcome to another video review. Today is Wednesday, May 10th, 2023. Let's take a look at the Forex calendar for today. On Wednesday we got the data from the Australia Westpac consumer sentiment. Data had been published overnight. We are still waiting for the German CPI data as well. The forecast is 0.4% and the previous reading was 0.8%, so the market participant they expect a drop, a significant drop in the German CPI. German Bubba will give a speech at 1:30, and then we got the core CPI data from the USA. This data is scheduled for release at 2:30. This time market participants expect this core CPI reading to be in line with the previous reading of 0.4%. CPI should stay at the same level of 5%. Building permits from Canada are scheduled for release at 2:30 as well, and market participants expect the building permits to drop significantly to -2.9%. Crude oil inventories scheduled for release at 4:30. And Cushing crude oil inventories are scheduled for this at the same time. Then we have some speeches from the German Bubba Vermeling at 5 o'clock, and at the end of the day at 8 p.m. we got the federal budget balance data from the US. So today we got some important data. We got core CPI from the USA and crude oil inventories, so we'll definitely take a look at the US dollar today, but we are going to start with euro dollar. This is 4-hour chart of the euro dollar, and what we can see straight on is that the euro dollar is trading below 50 and 100 periods moving average on the 4-hour chart, inside the negative momentum territory. So let's take a look a little bit closer what is going on here. As you can see, from the last high, let's say this is the last high, I got my magnet, yes, 1.1092. We developed first wave to the downside, second wave to the downside, and now the third wave to the downside. Apparently the local technical resistance located at 1.0967 had been violated, but the market is still below the moving averages. So what we are approaching right now, what level we are approaching right now, is the level of 1.0943. Again, this level was tested already, but the bounce is very limited, very narrow. So in a case of a further extension to the downside, we still have one more technical support. This technical support is located at 1.09 and 10, and that's a very important technical support, because after market made this support, it managed to make the local the new swing high. So the new swing high is located at 1.1096. So this is the current situation. Bulls are in control of this market, right? They are making pressure to the downside for the bears. We should see lower levels very soon, because as you can see, this pattern looks like a topish pattern, like a wedge pattern, and once we've completed the wedge, the falling wedge pattern, we can have a very dynamic, very aggressive sell-off on the euro dollar. Okay, let's find out what's going on the US dollar to the Canadian dollar. We got some Canadian data today as well. So that's the 4-hour chart of the US dollar to the Canadian dollar. We got the swing high located here at the level of 1.3666. Then we have a very strong movement to the downside. We broke below the technical support at 1.35.22. We are trading below 50 and 100 periods moving average. Very big sell-off towards the extremely oversold market conditions. Now this market is trying to pull back a little. So far this pullback is very cheap, very narrow, so not really something that market participants should be expecting from after this very strong movement to the downside. One more thing that you need to know at this level is that we have this recent movement to the downside, possibly made in 3 waves. So is either this is the low for the wave 3, and this is the, for example, wave 4, which is completed or not. We are still missing wave 5, or this structure here is still developing when wave 3. So we still, after the correction, will make wave 5 to the downside. So it looks very impulsive, so it might actually indicate the return of this market to the downtrend in the near term. Only a breakout above the 1.3550 will give us some kind of an invalidation of this impulsive scenario, and we will see some sort of the rebound. So that's the situation with the crude oil. Let's see what the S&P 500 is doing on a 4-hour chart. Very typical behavior for the S&P 500. We broke above the level of 4,177. We made a new local high at the level of 4,190, and then sharply reversed in 3 waves, A, B, and C. So when the correction had been completed around the lows from the end of the April, 4,051, then of course we got the pin bar and the market reversed again. So right now, let me just zoom in. We retraced the vast majority of this movement to the downside. So let me just see on the let me just see the Fibonacci retracement, if we can have some kind of important level to show up. Let me just take a look here. So that's our movement to the upside, and this is the down wave. We retrace more than 61%. So right now the Fibonacci is done, and we are trading. If we can do this with the trend line, we are trading below the trend line. Look, the market is apparently following this trend line as well. So please notice that there might be some kind of a movement to the downside. Momentum neutral momentum, waiting for the for more action on the S&P 500. Very nice corrective movement to the downside. I guess it's a typical for the S&P 500. Very deep retracement, but still below the key swing high, below the local trend line, just hanging somewhere at the level of 4,125, where the moving averages are on the neutral market conditions. So any big trigger, fundamental trigger, any big news from the fundamental news or geopolitical news might trigger the movement to the downside. The only way for the bulls to gain the leverage right now on their S&P 500 is to break above the swing high at 4,190. Otherwise, this market will be gradually moving lower and correct even more of this recent movement to the upside. There is still a gap here between 3,974 and let's say 4,000 points that has not been filled yet. So please make this make yourself familiar with the gap trading, gap filling procedures, because they might be vital for the S&P 500 very soon. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. So take care and bye bye.